this is just a general meeting. They'll talk about other issues, but it does come after the president has unveiled his budget that really sets his priorities for the next year, but also has this offer to Republicans. When you look at how the White House, in the context of the fiscal cliff deal at the end of last year, how they really worked with Wall Street CEOs to get those CEOs to pressure Republican lawmakers. It's an inside-outside game. Now, some of the CEOs, they may have some questions for the president as well. Maybe they'll question some of his assumptions on what he thinks the tenure will be in 2014, 2015. President's pretty low. He's at about 1.82% on the tenure. But one thing that we do know that they'll be talking about is the budget, and it's really what everyone's talking about in Washington right now, and this is a chance for the White House to put a little outside pressure on congressional Republicans.
Well, Don, you talk to all of the bankers and are very familiar with what they want. What do you think that they're going to ask the president?
Well, they would like less capital rules. We discussed this earlier today. The capital rules are really strangling lending, and that's kind of what their sales pitches is in Washington. They're also meeting this week with members of Congress. I believe they might be meeting with Paul Ryan on the budget. So this is something that they are going to use to their advantage. It's their spring meeting. It's the Financial Services Forum, an elite group of 19 of the top financial service CEOs in the world, and it's an opportunity for them.
How is that line of reasoning going to go down at the White House? Because the administration officials aren't dumb. They look at the same figures that we look at, and they see, for example, that in the case of J.P. Morgan, we'll just use that because J.P. Morgan happens to be the biggest bank in the nation. They're only lending out 60% of their deposits. So to say capital rules are strangling our ability to service the economy, it kind of falls down in the face of that evidence.
It might not go over so well with Obama, and I do know that story that we did a couple weeks ago on lending really was distributed widely in D.C. And so this is an issue that I'm sure that the president has on his mind, and that administration officials are also concerned about.
Well, let's ask Hans. I mean, Hans, what is the White House position at this point on financial regulation and some of these issues like capital rules that Don's talking about?
Their point and their position on it is that these are rules that are going to be written by the Fed. They'll be written at the regulatory level, and that Wall Street needs to play by the rules, that Dodd-Frank was passed, and that they need to play by the rules and accept them. You know, some of the CEOs that will be in the Roosevelt Room here at the White House have had a contentious relationship with Obama. Robert Ben-Moshe of AIG, he's at a certain point he referred to government officials in Washington as crazies during the Obama administration. Now, this is his second meeting at the White House, but he's not a frequent guest here. Michael Corbat, the new head at Citi. We've just gone through the visitor's log. It looks like this is his first trip to the White House. So yes, there's some also-rans, Jamie Dimon, but there's also at least one newbie in the group. And as the president and his entire staff works to reset the relationship with the business community, one part that I'll be trying to get a readout of this meeting is just how cooperative was it and how confrontational? Because the first term was defined by confrontation, and that didn't really work out that well for the White House. They'll acknowledge that. And so they had a reset, they had a restart, and the charm offensive, it's not just for Capitol Hill, it's for the business community as well.
Well, Hans, what about the looming threat of even higher capital requirements? There are factions on both sides of the aisle that are beginning to coalesce around this idea. We may even see some legislation drawn up. I don't know if such a bill would ever get passed, but have you any sense what the administration's point of view is on that? I'd have to figure that if Tim Geithner were still in the Treasury Department, he'd be against it. I don't know about Jack Lew.
Well, the White House in general is not sympathetic to the idea that the banks are too stressed, right? One of the aspects of the budget is it has that $60 billion financial responsibility tax. This taxes the biggest banks based on a percentage of assets under management. So the White House isn't overly sympathetic to this idea that the banks are stressed, and that's what's preventing them from lending, because they want to tax them more.
So how much of a fear is this on Wall Street, Don? The possibility that the capital rules that they hate now might actually get more restrictive.
Oh, it's something that is dominating these CEOs. They're thinking, and nothing has really gone their way the last 4 years. Almost nothing. They thought Mitt Romney would win the White House. He didn't. They thought they could water down Dodd-Frank. They weren't that successful with it. They didn't think the capital rules would be as stringent as they are, but they are. The stress tests, you see banks failing. J.P. Morgan has to reapply for their capital program. program. And so you see a lot of things not going their way, and the fact that capital rules could get even more stringent is something that is dominating their thoughts.
And yet tomorrow, over the next week, the 6 biggest banks are likely to report $20 billion of earnings. It makes it pretty hard, right, to wage that kind of battle when you're still making so much money.
It is. Yet J.P. Morgan's whale loss was entirely attributed to the fact that they were trying to work their way around capital rules. So this is something that it's huge. It's going to dominate the banks for the next couple of years, and it's not going away.